All right, welcome everyone. What's up, guys? What's up? Can everyone hear me well? Can you guys hear my words, my voice? Just making sure. I was having an initial problem with my mic, but this seems to be pretty well. It seems to be fixed, at the very least. So. Let me make sure to check on my side. All right. Perfect. Okay, so we have a lot of stuff to go over. There's a slurry of information that I really want to go over today, but I want to keep it simple and succinct. So let's go ahead and get started. So I just kind of want to, the goal for me to you guys, from me to you guys is to kind of give you guys a good guidance, some good navigation for the next couple of weeks, at least into the end of the month. So there is two possibilities. Well, there are two possibilities, as always, since the market is a dichotomy. There's always going to be some sort of bifurcation with one single idea. So, again, just my overall goal is to keep you guys informed and kind of give you guys a possibility of what the market can do, especially as we head into OPEX, which is tomorrow, the first OPEX day of this year, and kind of an insight into what we should be expecting as we head into the first FOMC meeting as well, that occurs on January 30th through 31st. So remember that, literally the last 2 days of the month. And also what we should be expecting into the usual seasonal on average weakness into mid quarter one, right? So mid quarter one is obviously February, right? So I'll kind of go into depth with that as well. So first of all, I want to talk about what we should be expecting tomorrow, right? OPEX. So OPEX, as you guys should know, we should have a lot of expiring contracts simultaneously, right, by the end of the day. And, especially with OPEX on January, the first month of any new trading year, we have a lot of leaps that are expiring, right? A lot of leaps. So, we already had the VIX expiration on Wednesday, right? And we saw that expansion of volatility as we head into that as well. So that's interesting to note. So make sure you guys note that and remember that, because expansion of volatility is never good, right? We had compression of volatility ever since we had that October 27th low, which you guys should also remember from last year. So, and again, if you guys don't remember, I told you guys that would happen back in late July to early August, that there will be an official pivot right in between the transition from October to November. And October 27th was that official day. So, with the expansion of volatility right now, with the S&P 500, seeing some choppiness thanks to that expansion of volatility, the expansion of vol, or VIX, right? That is the ticker symbol that you guys should be looking at, the volatility index of the S&P 500. So far, today we ended up closing at lows, it's a good sign whenever we see that when we head into OPEX, because we can definitely see some more activity coming in tomorrow, especially a lot more volume, a surge in volume. And in fact, we got that today. So first of all, on the daily time frame, I told my members today that SPY has to close at the very least right at the daily 10 and daily 21 SMAs. And in fact, we closed way over that. Right? We were able to see the price closing over both the 10 and 21 SMAs, which are currently sitting at 473.70 and 473.52 respectively. And on top of that, we had the 10 SMA curling back up over the daily 21. So the momentum on the daily time frame to the upside is still intact. Right, we're still squeezing to the upside, and so with a close like this, and the fact that we saw an association with the volume, where the volume has actually increased on the daily time frame compared to yesterday's low, tells us that there is more interest coming back in, more volume. Right now, today specifically, I want to talk about the fact that there was clearly some zero DTE trading activity. All right, so we made a pretty early morning pullback as we head into the lunch time or lunch hours over in Wall Street, right, on the East Coast. And after that, we saw a resurgence of the price as we saw a huge amount of volume coming in. And if you take a look at the 15-minute time frame, I mean, it was quite a rapid move to the upside, and so that clearly indicated that there was a lot of zero DTE trading activity going on, and I truly believe that we're going to see the same thing tomorrow. So expect a lot of wide price ranges throughout the day, especially as we head into the end of the day. And obviously, we're going to see a huge amount of volume at the end of the day too. So that'll be pretty interesting. But with OPEX tomorrow, and millions of dollars, millions of worth of contracts will be expiring simultaneously. So there is a slight chance now for us to squeeze higher. That's right. So there's a chance that we can see some sort of a squeeze higher tomorrow over to that 480 level that I've talked about. So obviously, specifically, I'm looking at 479.20-ish. But if you guys just want to round up or use the next whole number level, the psychological $480 level is huge, because if you go on the monthly time frame for SPY, if you go over 480, we'll be making all-time highs, right? Because the all-time high number was at 479.98, literally 2 cents away from all-time highs, right? So it's a pretty significant number that you guys should be watching out for, and definitely have it marked on your charts. Okay. Now, with the VIX expiration as well, it's basically the reason why the VIX expiration this Wednesday was so important was, you guys have to think of it this way, right? Market dealers, the people who make the markets move, right? They own downside protection, right? So if there's any downside risk, they have to have some protection. But as they're having this protection, the market is usually in an uptrend. That's usually what they do, right? And so they need to basically have a position with the underlying stock, the shares, right, the equity, on top of that downside protection, right? And so when the options expire, right, VIX, the VIX expiration, they have to sell those underlying stocks, right, to have a kind of a rebalancing effect, right? And so usually after such, expiration days like VIX or even OPEX tomorrow, we tend to see a little bit of market weakness coming in, right? Because remember, these are the big players, right? And so again, these market dealers, these market makers have downside protection during a market uptrend, and on top of that, they have to have, they have to buy underlying shares, underlying stock, and in order to rebalance, right? And when these options expire, right, they have to sell those stocks, right? And that usually indicates weakness, right? That leads into weakness as these millions of dollars of worth of contracts expire. So that is something that you guys have to take into consideration, and that's the reason why there is still a chance that we can see some sort of a squeeze until we make possibly a new all-time high number, or at least tap into a new all-time high number before we see a large pivot to the downside. All right, so hopefully I try to keep it as simple as possible. If you guys didn't understand that, please let me know in the comments down below if you guys are watching the recording. But right now, if you guys are confused, please let me know in the live chat. But if not, great. But again, these market dealers, these market movers, right, market makers, whatever you guys want to call them, they're going to move the markets, right? So far for now, SPY on the daily time frame clearly is still squeezing to the upside, and I can still see a possibility of us eking out a potential new all-time high number, which is going to be 480, right? And that's the reason why I named this live stream SPY 480 by OPEX, right? Possibility of us hitting 480. Now, again, this is a good segue into what we can expect after OPEX. So for the fact that there could be a small window of opportunity for shorts to try to smash the price down after the S&P 500 hits an all-time high number is probable, right? You guys have to think about that, because as we near the end of the month of January and we head into early February and into mid-February, that's usually when the seasonal trend of weakness begins, right? So from early February to mid-February is when we start to see that actual pullback occurring. And that's something that you guys should be preparing for, which is also the reason why I also gave you guys this level here, 460, right? I even wrote it here. So possible retest of 460. We'll keep this in mind for now. And if we do see an inevitable pullback in February, sometime in mid-February, when we see that that full seasonal weakness in force, we should be able to see a retest of 460 and eventually somewhere around 460 to around 452 or 451.50 to be exact. We'll see some sort of a consolidation as this becomes a new area of demand. Well, right now it is an area of demand, but if we start to consolidate in between this very wide price range, that will be a good area to start some sort of an accumulation phase. So again, that's kind of the further outlook that I have in mind. Who knows if that's going to be how it goes 100%. I don't know if I'm going to be 50% right, 80%, who knows, right? But as long as we can understand what can happen in the future, we can be prepared for it, right? So hopefully, again, my entire purpose of tonight's live stream is to provide guidance in what you guys should be expecting based on average seasonal historical trend patterns of the market, especially during quarter one, right? So again, OPEX tomorrow, I mean, especially even just on the weekly time frame, right? We have been having a pretty choppy week. It's a short week, mind you, and also there is this chop has provided us with an inside weekly candlestick so far. Now things can change tomorrow, but this weekly candlestick is still an inside candlestick, which still can confirm that we will continue to the upside. And so, again, who knows if the market's going to top out next, the last week of January, when we officially have that FOMC meeting and they come out with the rate results, the rate decision results, and whatever Jerome Powell decides to say during his opening statement in his press conference on January 31st, right? Who knows, right? So there's a plethora of economic catalysts, economic data catalysts, specifically another Federal Reserve catalyst that we need to remember. I mean, even so far this short week, we've had at least 2 Federal Reserve members speaking. If I try to remember, if my memory is right here. So, with SPY, technically, everything still looks very bullish, right? Everything looks very, very bullish. I can't deny that, right? So again, if my memory serves me correctly here, as we head into FOMC on January 30th to 31st, and with the fact that we've had Federal Reserve members speaking this short week, and the fact that we haven't really moved much, that's evidenced by this choppy inside weekly candlestick so far, which also can be changed tomorrow, depending on whether we move up or down. Okay, the market is still overall in the short-term and long-term uptrend, right? I mean, even if I look at the MACD down here, right, we're still seeing an expansion, right? We're still seeing good momentum to the upside. Or if you guys want to take a look at the RSI, okay, the RSI is still relatively telling us on the weekly time frame that, well, the S&P 500 is strong. That's it. All right, we're not overbought, we're not oversold. We're sitting right underneath that overbought level of 70, that value of 70 on the RSI, but we're sitting at 66.40. That truly tells us nothing, right? Doesn't tell us it's extremely overbought, extremely oversold. It simply tells us that the price is strong. The relative strength is strong. That means the buying is still here. So now that is going to lead me into this potential SPY trade. All right, finally, right guys, finally. I've been babbling on and on, right? So if I'm going to be expecting SPY to be over 480, so making a new all-time high number, right? Finally, because again, what specific sector has been hitting all-time highs? Nasdaq, right? Nasdaq, QQQs. If you guys haven't been living under a rock, you guys should know that, right? We've hit, well, let me just show you instead of saying it. Okay, so QQQ hit new all-time highs today after a nice gap up, after we saw, especially Apple. Apple was able to hold the markets up today really well, especially the S&P 500. But overall, QQQ had an amazing session today with semiconductors outperforming, including Apple as well. So if you guys don't know, semiconductors were seeing a very nice big move to the upside pre-market and during the day, throughout the day actually, thanks to TSM's earnings, the ticker symbol TSM, right? Taiwan Semiconductor Manufacturing Co. Right? So again, SPY, there are many reasons to be bullish. In fact, personally for me, I think there are a lot more reasons to be bullish compared to being bearish. But having reasons to be bearish have been slowly increasing in my head. So that's something to take note of as well, because I tend to be short-term and long-term bullish in the overall markets. But when I am starting to see some signs that are telling us that, hey, we should be seeing some sort of a pullback now, there is going to be a case for a potential bearish move to the downside, you guys should take note. All right. So right now, I would say from a percentage standpoint, I am still, 65 to 70% bullish. And if let me just make it a solid single number: 70% bullish and 30% bearish. Okay, so it's kind of an arbitrary number there, but that's kind of what I'm feeling, what I'm gauging from my gut feeling. And so now, based on that, tomorrow, okay, I want to see if we're able to get a very nice entry on the S&P 500 for a potential trade into all-time highs, right? And so, S&P 500. First of all, I want to show you guys this percentage move. So 480, right? So if you go from the closing price of today, right? So it's almost 1%, right? Now, if we do break into a new all-time high number over 480, or even simply at 480, since again the all-time high is sitting at currently at 479.98. It's 2 cents away from 480. There is a good chance that we can continue to go up higher, because again, usually when we start hitting a new all-time high, for the first time, we tend to see continuous buying from buyers, right? We see continuous bidding of the price higher into continuously new all-time high territory. So for me, we can potentially add another percentage move up higher, maybe even up to 2%. Right, so let's, for example, for the sake of an example here, right, 2%. That means we can see a potential move to the upside into new all-time high territory to around 485 to 486. All right, so for me, I'll be quote-unquote a bit conservative here, and I'll say 485 is a good area, right? So that's around 1.80% from today's closing price. So if I have that potential outlook into the end of the month, into the FOMC meeting by the end of this month, January 30th to 31st, that'll be the last time I'll say it. Make sure you guys remember that. What I'm looking at potentially for a good trade is, okay, write this down, guys. Write this down. The 485 call contracts that expire on February 2nd. Okay, and that should cover tomorrow, OPEX, and the FOMC meeting. Okay, so whatever happens between tomorrow or now and FOMC, we can potentially see a run up into this new all-time high territory as we see kind of a bullish fervor kicking back in, if and only if we decide to hit 480 and move, well, continuously move up higher over 480. So again, 485 call contracts that expire on February 2nd, right? And also on the same expiration, actually, we saw, well, I personally saw a pretty odd buy on the 480 strike call contracts on the same expiration date of February 2nd. And today the volume closed at 88,541 contracts traded, right, on the volume. So tomorrow we'll see that confirmation of whether or not this amount of volume is going to be carried over into tomorrow, because it will show up on the open interest. And the OI for today, it closed at 3,253. So there is a chance that the OI tomorrow on these 480 strike call contracts with the expiration date of February 2nd, 2/2, can be over 90,000. Right? That's pretty big, right? That's very large, and the premium is not that cheap either. So whoever bought these are risking, yeah, it's more than $1 million, right? Way more than $1 million. It's almost 2 million, I believe. Okay, so that's huge. And if whoever got this, if they had a similar thinking to mine, I would want to be able to be in with this person or persons, especially if we decide to continuously move up higher and have a nice breakout over 480. So as long as we continue to move up higher into this all-time high territory, the whole number levels are the key. All right, because again, we don't have any previous levels to go off of, especially if we head into this all-time high territory. So again, this 2% move from close today, or 1.80% move from close, it's all arbitrary, right? It's just what I personally think and what I personally expect to see, and it's all from experience as well, right? I'm not just saying this or pulling this out of my butt, but it's SPY. All right, this is kind of the strategic move that I would expect to see, especially since the S&P 500 has been lagging, on the backdrop of Nasdaq continuously hitting all-time highs. All right, and it makes sense, right? Tech is leading. Okay. All right, so that's kind of my overall bullish thoughts and the potential SPY trade that I really want to share with you guys. Again, high risk, really high risk, but potentially a very highly rewarding trade there. So again, trade those at your own risk, truly. Make sure you guys have a set game plan always: entry point, exit, and stop loss. Right, if you don't have those 3 pointers, then you shouldn't be executing that trade at all. But overall, again, if you guys want more of a clarification on what I've told you guys on this potential guidance and potential future navigation for the next couple of weeks, 2 to 3 weeks, let me know. I'll personally write to you guys kind of more of a concise but a more clear summary of what I just told you guys in this live stream. But overall, if you guys don't have any questions, Well, if you guys do have any questions, please let me know in the live chat right now. But hey, if you guys are liking this content, please leave a like down below as well. Or if you guys aren't subscribed yet, make sure you guys hit that subscribe button. We have been actually growing pretty rapidly in this short week, which is amazing to see. So thank you guys so much for all the newcomers who have subscribed as well. And especially if you guys hit that subscribe button, you guys have to make sure to hit that notification bell as well, so that you guys know when I upload a new video or when I am live. Now, typically, you guys should know that my live stream schedule is from every single week, every Tuesdays and Thursdays at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. All right. Now, I kind of want to take a look at the other side now. Like I just said initially when this live started, right? The market is a dichotomy. If we do have one single idea, that single idea would see some sort of a bifurcation, right? So let's take a look on the bearish perspective. So the dollar has been seeing a pretty good bounce, right? From 100.80ish here. This is my level that I've drawn on the DXY, the US dollar index. And we've been making higher highs and higher lows, but overall in the longer term trend in the past couple of months, so around October to now, we're still in an overall downtrend. We're still seeing lower high pivot points. Okay, but so far this has been a pretty good pivot from lows at 100.80ish, and also if you go further back into last year, especially in the start of quarter 3, we had this low here, and now we've made a new pivot low that's been a higher low as well. That's something to take caution of, right? And also to take note of, and most importantly. So the dollar is slightly concerning. We've seen commodities, especially like gold and silver, or gold, even gold miners, they've been absolutely ugly, just destroyed, right, since late December, due to the dollar bottoming out and pivoting away to the upside in late December as well. So that's something to take note of. And again, it's concerning, but you guys have to take note of it. Now, the other and final, I guess, quote unquote signal that you guys should be looking at is the 10-year yield, right? TNX. Okay, this is the 10-year Treasury note yield, which has found a bottom as well. So again, TOT, right? TOT, the 20+ year Treasury bond has been moving lower. There's been huge trades as seen by these very large volume bars. Recently, they've all been selling. That makes sense, right? But if you guys have followed me back in at least back in late or mid to late October, you guys should know that I was looking for TLT to go up to 92, which it did, and then it went up even more until we hit that triple digit number at 100. So now, I think for now, we are probably going to go back to 92, which means the 10-year yields will be still moving up, right, to at least 4.20. Okay, so again, the dollar, right, DXY or TNX, the 10-year Treasury note yield, have all found bottoms. So that is a concern that you guys need to take note of as we head into more catalysts that will affect the equity markets. Right, again, we have OPEX tomorrow, and we have the FOMC, the first FOMC meeting of this year on January 30th through 31st. So it's a pretty risky bet to try to be bullish and to thinking that the S&P 500 can head up into new all-time high territory and continuously move up higher. But again, just solely based on the technicals, everything is telling us that the market wants to squeeze up higher, even just on a day like today, where we saw a bunch of 0 DTE call options just being bought and pushing the price up higher, the underlying share price higher on the S&P 500. So if we can get the same type of an effect tomorrow, it'll be pretty interesting to see if OPEX leads into, or OPEX is the cause for a new all-time high price to be printed on the S&P 500, which will ultimately, allow the S&P 500 to finally be moving together with the Nasdaq, with the Qs here in relative of all-time highs, right? Because again, the Nasdaq has been leading and continuously hitting all-time highs compared to the S&P 500, which has been completely lagging. Okay. Now, lastly, I want to talk about small caps. So small caps or mid cap stocks, they haven't been doing too well, right? And the only reason why, the sole reason why is the TNX, right? The yields. The yields have been pivoting again, just like I've shown you a couple minutes earlier. And so IWM especially has been feeling the heat on that. And so far, we're still very much bullish on small caps. Why? Just take a look at the monthly time frame or the weekly time frame. Just take a look at all the higher time frames, the HDFs, and you guys will see and realize that there's nothing to really be too worried about. Sure, the yields and the dollar have been rising. They've pivoted away, but again, from a long-term perspective, IWM still holds a very bullish structure, right? Especially after that large move from November lows to December highs. And so far on the monthly, you guys should know what this is, right? A monthly inside candlestick, right? That usually indicates from a candlestick analysis perspective, continuation. And what continuation? An uptrend continuation, right? How do you know we're in an uptrend? Well, come on now, what? Right? On December, we've made a higher high compared to the previous pivot high point on July, right? The July monthly candlestick here. So, that's clearly a new uptrend for small caps. And as long as we start to see yields and the dollar dying down again, which will eventually happen and occur, we should be able to see IWM coming back and climbing back over to this psychological $200 whole number level. All right, so small caps, again, I think right now is a perfect time to be accumulating. I've helped several people on guiding them on where they should be accumulating IWM, and right now it's a perfect time, right? If you guys have been following me, I said 189.50 was the level to hold, and so far, what are we doing? We're currently, moving up and down, being very, very choppy at this 189.50 level, especially as the daily 50 SMA continuously rises. Right, we've just had a bullish cross back in early January, and now the 50 SMA has fully caught up to the price. And so as long as the price starts to move away from this large SMA, this 50 SMA, including the daily 200 SMA, we should see continuous run up to the upside. Okay, so that's very important for you guys to remember that small caps are currently being, the bullish fervor is kind of gone for now because of the fact that we've seen yields rising after pivoting and finding a bottom, and also the pressure from the dollar as well. All right, so again, long term, I just told this to my members as well in the CFO Discord that there really isn't any reason to be so bearish on small or mid caps. We're still in the middle of January, right? And the Federal Reserve has told us, right, that there won't be any rate hikes at all in 2024, right? And I've told you guys this early last year as well, that whenever we have a long pausing period, what immediately follows after a pausing period where the Federal Reserve holds rate, the benchmark rate, right, the federal funds rate at highs for months at a time, what usually tends to follow right after, rate cuts, right? What usually tends to follow right after a pausing period is rate cuts, right? A rate cut cycle. Okay, and plus, on top of that, the Federal Reserve have been doing a lot of QT, a lot of QT, all right? So it makes sense that small and mid caps are going to be they are going to be seeing a lot of bullish resurgences on any type of a pullback or any type of a textbook correction. And when I say textbook correction, that can mean from 5 to 10% move back to the downside. Okay, and so far, if you guys want to look at the percentage here, from highs in December to where we closed at today, right? We're at negative 7.39%, somewhere around there. So let's say, just say negative 7.40% to round up. So again, IWM clearly seeing a very textbook pullback right into the daily 50 SMA, and just from a percentage standpoint, very, very textbook pullback. Okay, so I think as long as we stay over 189.50, or if you guys want to keep it simple, 190, we're pretty much good to go. As we head into the usual seasonal weakness, where I think IWM and mid caps, or MDY, if you guys want to take a look at that ticker, MDY, we should be seeing some sort of sideways consolidation after this initial pullback. Okay. All right, so that is it for tonight. Again, if you guys really enjoy what I tell you guys, or if you guys like the guidance that I provide you guys with every single one of these live streams or any of the videos that I upload, make sure you guys leave a thumbs up down below, and most importantly, subscribe to the channel. We have been growing really rapidly this week. I don't know what happened, but seems like you guys are enjoying the content that I bring out to you guys, and obviously, most importantly, the applicable information that I give you guys, so that you guys can navigate the markets as easily as possible. All right, so that is it for tonight. Okay, good luck tomorrow. Be safe. Always have your stop losses. Always have your alerts on for whatever price levels that you guys are looking at, for any type of breakouts, or again, simply for stop losses. You guys can have alerts up for your stop losses, believe it or not. But yeah, have a great rest of your night, and I'll see you guys next week on Tuesday at the same time at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Have a great rest of your night. Thank you so much for watching.